But one farmer says, seems to me there was a tea party in Boston that was illegal too.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
We shall seek to establish and maintain a dollar which will not change its purchasing and debt-paying power during the succeeding generation.
As anguished shrieks rose up from the floor of the New York Stock Exchange.
Government credit and government currency are really one and the same thing. A reserve of gold and a small reserve of silver.
Why do central banks hold it?
Well, it's a form of reserves.
Why don't they hold diamonds?
Well, it's tradition, long-term tradition.
Well, some people still think it's money.
Good evening, good morning, good afternoon, wherever you are on the planet, my fellow conspiracy theorist brethren, tinfoil hatters, and gold hawks. Don't log off just because of the slide you see now. We're not going to spend the whole video on this. I know it's all over the internet and any financial network and site that you're probably visiting that relates to the economy and state of things. Yes, Bitcoin breached the 10,000 level once again today as it makes that recovery from what essentially was a pretty significant bear market, being down for a while that it was, and hitting a low, what was it, in the 3,000 range during the big sell-off that we saw with essentially every single asset class during the ongoing pandemic situation. So yes, we'll just touch on that news briefly. 10,016 here on this shot. Now it changes by the second, so it could be under 10 again. Now I know it's been all over that range today, but it's just another sign, another symptom, because yes, Bitcoin is for some people a hedge against inflation. There are those that use it as such, and it is reacting, of course, to the upcoming halving, where I guess their reward or the amount that is mined is cut in half, something like that, of that nature. I'm not an expert on that conversation, so I'm not going to venture into it too deeply. I just know that it is something that does react and was written to pattern somewhat the behavior of gold, being that it's limited. There's a fixed amount of it, and we have more dollars in circulation and coming into circulation every single day, chasing things like gold and Bitcoin and silver and those types of vehicles. And now to the gold. So buckle up and buckle in. We got a pretty good lineup of topics to discuss today. We're going to look at some currencies, some excellent articles also pointing to what I've called the multi-decade bull run coming for gold. It's already been a decade and a half strong bull run for gold. Although it's not as hot right now as the old Bitcoin when it comes to topics of conversation, and you've got the crypto guys out there saying that Bitcoin's performing better than gold. Well, hey, the story's not over until the fat lady sings, and haven't seen a fat lady singing in quite some time yet, so we've got some time on that to wait. But gold sitting at 1726.40 last time I checked. It was up, this is an after hours trading, I believe it's 60 cents there, 0.03%, but again, it did pretty good today. I think there was a point where it was up $36. It did a $36 run per ounce. It's up at 17.26. Silver, 15.73. So it's still struggling to hit that 16 mark. Now, believe it or not, I spoke to a congressman today on the telephone. And believe it or not, he actually called me, which is, I don't know, it doesn't happen every day that a congressman calls you. And he wasn't just calling me, doing the robocalling, looking for voters or anything. I had sent him an email. We had a brief discussion regarding some things, and I had some concerns I'd like to express, things that you have heard here. It's very surprising to me how many congressmen and those who run for office, those who are in D.C. and places like that, don't have really a clue as to the history of U.S. monetary policy, key events, key Supreme Court cases like that we've discussed recently, Knox versus Lee, Hepburn versus Griswold, things that going back to like the U.S. Coinage Act, the Gold Confiscation Act, 1933, the forming of Bretton Woods, the breaking down of Bretton Woods. These guys have no clue. I mean, you literally have an entire apparatus there that drafts legislation and attempts to govern a nation, and in a sense, the world economy, they don't have a clue how the Fed works, the relationship between the Fed and the Treasury, what sound money even is, or how it should be. The entire system's broken from the ground up. That's why I don't have any faith in it. I don't think it can be remedied. It's unfixable. We have an apathetic and ignorant masses. The problem with democracy is that anyone can vote. So you have people that should not have any voting power whatsoever casting ballots. Yes, I said that. I believe it. I believe that democracy is flawed. It does not work. We need to change that in order to change the way things are done and the way monetary policies are even implemented. Yes, I believe people should vote. We should have a voting type of a situation. But I don't believe that everyone has the right to vote. Oh my goodness, Junius Maltby doesn't believe everyone has the right to vote. Yes, I don't. I don't believe it. I think some people are just too stupid to cast a ballot. I'm sorry. You've seen these people. You mingle with them. You pass them in traffic every day, and you see them, eating Tide Pods or huffing, paint. I mean, these people have vote power, and I don't want to live in a country where people can eat Tide Pods or huff paint and have the same leverage, the same voice that you or I have. I think there should be a testing process, an intelligence screening, and a way to determine whether or not a person has an understanding of the republic or the nation in which they live and how to steer its course through voting. So I know that's kind of a tangent. It's probably a video that we could do just on that topic, on why not everyone should have the right to vote. But let's move on. Yeah, I spoke to a congressman. I shared some concerns. Big deal. It's not going to go anywhere. I told him to look up Hepburn versus Griswold, Knox versus Lee. We talked about that. I think he's going to go do it. Nothing's going to happen. I don't have any faith in it, but that's okay. A basket of currencies determines the value of the SDR, special drawing, right? The SDR value in terms of the US dollar is determined daily based on the spot exchange rates observed at around noon London time and posted on the IMF website. The SDR was initially defined as equivalent to 0.888671, so decimal 888 grams of fine gold, which at the time was also the equivalent to $1 US. After the collapse of Bretton Woods system, the SDR was redefined as a basket of currencies. So again, nothing is backed by gold. Now, the reason this slide's important in this little part of the video is we're going to look at a lot of currencies at the tail end of this video. And remember, none of them are backed by gold. Gold is not part of the basket of currencies. It is the only real sound money. I know I always reiterate that, and it seems like I'm beating a dead horse. And if you want to go back and watch the archives, you'll get a little bit better understanding on why we here on the Junius Maltby channel feel that way. I believe that we have an overwhelming amount of historical precedent and evidence dating back, let's say 10,000 years or so, 7,000 years, that kind of backs that position, as well as the entirety of Western civilization pre-1933 or pre-1971, depends which marker there you want to use. Now, yes, I am exhausted and tired today. I was in the garden a little bit, but I felt it incumbent upon me to get this video out to you guys here on the Junius Maltby channel. So here we are. Here's what gold does when the U.S. government goes on a borrowing binge. Now, they've been on a borrowing binge, my entire life. It's like the guy you see in the gutter shooting heroin and drinking cheap liquor, saying that he's looking for rehab. He's not going to find it, and rehab won't take him. He is doomed. He is an addict, and he's addicted to debt, and that is the U.S. government. Data and trends support bullish call on gold as asset class. And this is from DeGraff. We'll see his quotes here in a moment. But yes, a multi-decade bull run is coming. Look at those fat poured loaf bars of gold. Please let me have one of those one day. What thrives in massive upside changes to Treasury debt outstanding? Gold, of course, wrote Jeff DeGraff, founder of Renaissance Macro, in a note featuring the chart below. I love that this guy does his handwriting on a note, on a chart. Beautiful. And I can't really make out what he wrote above there. Who loves large changes in U.S. debt outstanding? You? Gold, of course. Gold loves outstanding changes in U.S. debt. And of course, we've looked at that. We've talked about the debt. I mean, come on now. It closed in from 23 trillion to 24 trillion in something like 159 days. It took the birth of the nation to 1981 just to get the first 1 trillion in debt. And now that is accelerating. We are going to see 30 trillion in a matter of no time. It's right around the corner at the rate things are going now. I haven't checked in on it recently. I think we're closing in on or just about to hit the 25 trillion mark. And the Fed, of course, injected 6.5 or so trillion recently to stave off their pandemic crisis brought to us by The Who, and no, not the British band. The U.S. government is going on a borrowing binge, with the fiscal deficit set to hit 4 trillion this year in the wake of the pandemic. If history is a guide, that should be a positive for gold, a closely followed Wall Street chart watcher noted Thursday. And we just read what Mr. DeGraff said there below. It's about pace and level, and last time we saw something similar was during the aftermath of 2009, which gave us 2 solid years of gold performance before the contraction of 2010 portended correctly the cyclical peak, he wrote. And all of you here are familiar with the chart. That's just a few of the only down years gold's had in the last 15. Remember, in 15 years in US dollars, gold has only suffered 4 down years. The rest of them all exceeding those in being measurable gains, some of them 20 to 30% with an average of about 10% per year. Now, every once in a while, I get a window-licking booger eater down in the comments that likes to accuse me of being a gold salesman. Look, buddy, I don't make a penny off gold, and gold doesn't need a salesman. Gold sells itself. It doesn't need advertising. It doesn't need anything like that. Now, of course, there's some shady outfits out there that like to try to get you to pay them to vault gold or this or that. But ultimately, gold doesn't need a salesman. It is gold. It doesn't need anyone to convince it otherwise. Truly bullish case. Gold price and the Japanification of the U.S. This is from Pepperstone. As we all know, Japan had the lost decade. I think now they have the lost 3 decades or something. They have almost no ability to change their interest rates. And they live off of a situation of negative yielding bonds. Well, let's just read what they have to say here. This is from Kitco News. The case for gold is still a bullish one, as it is a hedge against fiscal deficit, fiat currency debasement, global pool of negative yielding bonds, and possibly inflation. According to Pepperstone, the key level to watch in the gold market is a breach of 1738 an ounce. Again, I don't like the discussions regarding key levels or breaches and chartography with gold, especially as manipulated as that market can be with outside factors. And again, this is always referring to the paper price, the COMEX, and we all know what that means and how that is. We've seen the dishonesty that exists in the paper market. You can't even buy gold for 1738 in a physical form anywhere on the planet. At this point, it's just not going to happen. You can't even get gold right now for even $100 over spot, so 1838 in most places. This is not possible. The premiums are too high, the supply is too low, physical delivery is still having a problem. So again, this is all the prices we see and discuss are regarding paper contract prices for the metal. Gold is a hedge against a blowout in the fiscal deficit. It is a hedge against central bank experiments and fiat currency debasement. And for 2020 perhaps, a hedge against a refocus on the global pool of negative yielding bonds. However, if we head into 2021 and beyond, perhaps one day, it will be a hedge against inflation, but it will not be good inflation, he wrote. And of course, central bank experiments, what else is modern monetary theory, MMT, but an experiment? An experiment that has only ever proven to be destructive and flawed and does not work. All right, all you ignorant cokeheads of Wall Street, show me a chart that compares to this, that's as stable and has endured the recent events that we just went through. Here you go. This is just a 5-year chart on gold. And as you can see, very strong. It's breaking out at this point, I believe. Doing very well, reaching new highs as far as going back over a decade. And it's doing quite well. This 1726 level is, I don't think, a place where it's even going to pause. And it's going to breach through the 2000 eventually, and it will touch 3000 probably sooner than we think. Now let's go on and look at some currencies, because this is again in US dollars. So in order to understand where it could be headed in US dollars, because the US dollar being the world reserve currency and everyone forced to peg to that leper, the leper with the most fingers left, other currencies don't have that privilege or that benefit. You know, they have to peg to the dollar is being inflated and printed, and then of course, their own economies suffer from socialism, debt, and programs that are flawed and failed, just like the ones they're trying to implement in the United States. So let's look at some other countries and how gold is in their currencies, because it gives you a pretty good idea what you might look at one day when it comes to how gold is valued, as far as how many paper coupons, how many pieces of confetti, how many pieces of monopoly money might be required to attain physical bullion. This is the Argentine peso. Argentina, you've got gold at 115,383 pesos per troy ounce, rising. This was earlier today. I think this was this morning when I started getting some of these slides together. It was already up 2,318 pesos in the morning, and that was up 2%. Silver, 1,031 pesos for an ounce of silver. Up 29 pesos for the morning there. That was again earlier today. I know the silver guys are looking at this just drooling. Imagine for a moment here. I want you to look at this chart and pretend that it's not in Argentine pesos. Please. Pretend for a minute you're in the future. You time warped there just now, and you pull up to see what the price of gold is in the future, whatever date it might be where you landed. And this is what you see on the screen. You see gold at 115,000 US dollars per ounce. You see silver at 1,000 US dollars per ounce, and silver being up $29 per ounce on the day, with gold up $2,318 on the day. This is a possible scenario. This chart could and does likely exist somewhere in the future if you travel on the timeline that we are currently on. Yes, it is possible. Anyone who tells you otherwise is truly a window-licking booger eater who has no understanding of economics whatsoever. This is the Brazilian real. Here we are in Brazil now. 10,017 reals to 1 ounce of gold, up $440 this morning. You have silver at $89 per ounce, 89 reals per ounce. Can you imagine? Again, I want you to imagine every one of these charts as being in US dollars at some point on a timeline. Okay, now I know this is Brazil, this is the real, that's their currency, reals, however you want to pronounce it. But again, broken economies, broken countries, debt, social programs, mismanagement. Okay? Think of that. Contemplate that. Grasp it. Wrap your mind around it. Dive into these numbers and look at them and imagine for a moment it happening here, or whatever nation you're tuning in from. I know a lot of you are in other countries like Australia or Canada or New Zealand. We're going to look at a few of those, but again, 10,000. The reason this slide's important is because, of course, Bitcoin hit that exact number almost today, 10,016. So imagine this happening, and it very well, most likely will, to gold, 10,000 US dollars. My dear friends, my snow Mexicans to the north, my Canadian brethren, here you have your currency. Look at this, 2,401. So already in Canada, gold sits above the 2,000 marker. In Canadian dollars, we have 2,401 Canadian dollars to purchase 1 ounce of gold. Silver sitting at $21.46 per ounce in Canadian dollars. Now, I know you're not as dysfunctional as some of the previously mentioned nations. Your economy is a little bit stronger, but you're headed in the same direction we are. We all are. We're all headed that way, you know. And then you're not backed by gold. Nobody is. Everything's just paper. Everything's fiat. It's all garbage. It's all trash. And we've got some other countries to look at here, but there you are. That was Canada this morning. Hello, mate. Here we are in Australia. 2,643 Australian dollars for 1 ounce of gold, up $19 at this slide shot this morning. And then you've got the silver, $23.66. Again, not extreme, nothing like the charts we saw earlier. We're going to look at some other broken nations. But another example, this is just a stepping stone on the path towards 10,000 or 100,000, whatever currency it is, to get 1 ounce of gold. It doesn't matter the name of the currency. What matters is they're all fiat, they're all backed by nothing, and they're all run by people and governments bent on debt. So all of them essentially are on the same path. It's kind of just a race to see who can get theirs trashed the most, the quickest. Here we see the Bulgarian lev, the BGN, 3,111 Bulgarian lev per ounce of gold. Silver 27. So I'm surprised silver's a little bit behind compared to where I would think it would be if we had $3,000 gold. I would hope we had at least $50 or $60 silver at that point. But we'll take that 27 lev per ounce of silver. And as I've said earlier, this is just, again, the stepping stones on the way to those higher numbers that we saw. It might make sense now why I often say the dollar is the leper with the most fingers left. The only reason it appears to be the stronger currency is because it's the reserve currency. All of these countries are forced to peg to the U.S. dollar. Well, the U.S. dollar isn't backed by anything either, and it has this monopoly enforced by U.S. economic policies and, of course, the might and power of the United States, and that is waning. It is waning, believe it or not. It's not always going to be that way. There are things changing around the world. Tectonic plates are shifting when it comes to trade, currencies, global economics, and what is considered to be or should be the reserve currencies and what's pegged to what. There's been fights and discussions about different commodity baskets, and different regions have come up with their own ideas of pegging certain things to oil and to gold and to each other. And of course, typically, when that happens, it coincides with a military involvement so that we can bomb them into freedom, to kind of discourage that type of distancing from the U.S. dollar. We've seen a lot of discussions with Russia, with China, deals that they're making, deals with oil, and deals with Europe and trade between Russia and Europe. And all of these things take place, and behind the closed doors, when we don't see it, the things that never make it into the news or on the news cycle and in articles are those geopolitical deals that are taking place, currency discussions and commodity discussions, trade. That's what's really happening. And when it gets right down to it, all of it ultimately is economic warfare and superpowers and not so superpowers jockeying for position and control. Hop again in your time machine and join me in the year 2025. Can you imagine? This is the Chilean peso, 1,432,113 pesos per ounce of gold. What's silver at? Silver, 12,812 pesos per ounce of silver. Pretty exciting chart, wouldn't it be? If that was... Now, the thing you have to imagine is, if we existed in a time where the dollar had collapsed this far, and this is what was going on, and believe me, I do think that's possible. I don't know when. I absolutely cannot put a date on it, but it is the trajectory. It's like being in a school bus that careens off a bridge. I don't know the exact nanosecond when it's going to hit the bottom of the ravine, but it's going to hit it. It's on its way there. Gravity will do its job. It always bugs me when somebody says, oh, it's not going to happen here. It's impossible. That's Chile. This is America. It's America. Heck, can't happen here. Dang it, this is America. We don't do goddamn like that. They're NASCAR. Sorry, that's a very ignorant position to take, number one. Number two, you remember the video we did years ago? I showed you the Zimbabwe note, the hyperinflation that took place, the $100 trillion note in Zimbabwe. The funny thing about that was when we discovered that the Zimbabwe notes and the Euro notes came out of the exact same printing presses on the exact same paper, likely using the same ink, out of a printing press place in Germany. The only difference between a $100 trillion Zimbabwe note and a €1 note is the images placed upon it and the nation that was issuing it. No nation is immune to the economic laws of inflation and hyperinflation, money supply, debt, all the things that commingle and create the supposed value of a particular currency. So if you think you're immune, you're just an idiot. There's no real polite way to put it, or nice way to put it. Well, you're back in your time machine. You went a little bit further into the future, and here you are. It's $40,249,944 per ounce of gold. This is the Vietnamese dong. And in silver, we have it at 360,052 dong per ounce of silver. And what was it doing this morning? It was up 10,034 dong per ounce of silver. And it looks like it was up 740,995 dong per ounce of gold. Significant numbers there, right? Pretty incredible. Now, it's no wonder why when you go to some of these countries, people are panning the dirt outside of jewelry shops to obtain any tiny fragment of gold they possibly can, because it's worth so much in their currency, and they can at least get something that holds value over long term rather than the inflated garbage and trash their government issues to them. Have no fear, my friends. You have U.S. politicians at the helm and people like AOC that are just absolutely brilliant, and Bernie Sanders, and you've got Donald Trump, and then you got a lot of people that know everything, and they're going to fix it, they're going to make it better, because the U.S. dollar is supreme, right? Nothing can happen here. We can print as many as we want. We could give every American $1 million. It would have no effect on anything. And they should. Everyone should just get money and stay home. We don't have to work. We don't have to produce. We don't even need an economy, really. I mean, why have businesses if the government can just mail us all checks? We can just live every day spending, and the money will just come in the mail or get direct deposited, and no one would even have to work. I mean, that's the way the world should be, right? I mean, that's, come on now. Just quit your job and let the government send you money. It's perfect. Perfect scenario. Now, if you took a trip down to Venezuela, this is the Bolivar. They've done some restructuring there. Their economy was pretty broken for a while, and it's still broken, believe me. And, we've got Americans. Well, we talked about that last night. We won't go too much more into that. But here it is, 17,000 bolivars, 17,146 bolivars per ounce of gold. It was up 315 bolivars this morning. And silver was at 153 bolivars per ounce, up just 4 bolivars per ounce on the morning. This is the Cambodia riel. I think it's pronounced riel or riel. 7,009,623 rials per ounce of gold. This is tonight. I just took this screenshot moments ago. It's down 45,922 rials. You got silver sitting at 62,999 reals per ounce. Again, I want you to imagine this in dollars. $7 million for an ounce of gold, or 62,000, we'll just call it $63,000 for an ounce of silver. I think you guys get the idea. I could do this all night. There's a lot of currencies out there, a lot of broken governments, and a lot of fiat, a lot of paper, a lot of little pieces of paper with images stamped on them that are worth absolutely nothing. Well, back in the USSA, to quote the Beatles. We've got gold at 1725 up 36.50. Yes, I know it's USSR. And Barrick CEO, this is one of the big gold mining companies out there. He was interviewed. They had their earnings report yesterday. So I went ahead and read some of the things he had to say. Because he said there's a rising demand for gold as a self-funded insurance policy in a global crisis. And I don't think it's only the global crisis, though. I think, as we've looked at before, I think the wealthy and the elite are stacking gold for an entirely different reason. A big standout here was that the company reported a 55% year-over-year increase in profits. They're doing a lot better than a lot of other companies out there. We're giving investors the opportunity to have a self-funded insurance policy against a global financial crisis, Bristow told CNBC's Squawk Box on Wednesday. In response to the pandemic, we've taken quantitative easing to another level. And of course, that puts pressure on paper money. And you measure that with the price of gold, Bristow noted. We've seen prices go up across the world. We just looked at that. Gold is seen as a bellwether for economic uncertainty and has crossed the $1,700 mark for the first time in 7 years, though it was trading around $1,689 on Wednesday. The commodity hit a high of $1,900 in 2011, but dropped back in 2013 to start a trough. Well, it came right out of that. I still remember the echoes of idiots calling for gold to dip below 1,000, and it never even did. You've seen a shift in the base of the gold price, Bristow said. Added demand from China drove the initial gold price post-2005 as we came out of the hedging crisis. And then the mining industry itself added a whole lot of supply on the back of that rising gold price, and in fact, in the process, destroyed a lot of that value. During that trough, we've learned a little bit of discipline in the gold industry, Bristow said. Now, as the Federal Reserve has cut rates and global uncertainty reigns, the industry is seeing a spike demand for gold. That concludes tonight's broadcast, my friends. I'm glad you were able to join me for it. I appreciate each and every one of you that actually stops by to sit through a 30-minute rambling of extemporaneous rants here from the Junius Maltby channel. I hope you find some value in this passed on information. And I appreciate each and every one of you that's a Patreon, a subscriber, a viewer, a follower, those who donate and support this channel, those of you who link me to articles and send me information necessary for the production value that we see here, and those of you who appreciate the work that goes on behind the scenes to produce the content here on the Junius Maltby channel. Hope you all have a good rest of your evening, and I will see you further down the timeline at $7 million gold. Take care.